And that means we are now live here on our YouTube channel. It's Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time, looking at the charts, the economic data, information in commodities, currencies, anything grabbing our attention we think is important, relevant, and interesting. Analyze it, give you guys some insights so you can better run your daily routine. Got a full crew here for you today. We've got Cody and Young Tanyan on the back end producing. I've got Matt and Mark providing analysis as always. And then we have the queen here to grace us with her presidents, Coach Emily Mururi from the Women in Trading Group as well. And I'm going to start with Emily. How are you doing today?
I am doing wonderful, Tim. How about yourself?
Fantastic. Fantastic. In fact, I'm very excited to have you here. We're going to be holding Queen's Court a little bit later in the show. And I believe, the very first time, right? And hopefully you don't chop anybody's head off yet.
I'll try not to. I'll reserve that, but I have a feeling I might just have to. I just have to go start strong.
Be the benevolent leader. Well, you're the queen. You get to decide. I'm not going to start pushing on that right away.
Is it Alice in Wonderland, the off with her head?
Yes.
Is that Alice? Okay.
Off with his head.
I need that. I need that impression and interpretation when we're doing off with his head. When you are cutting Tim's head off later today, off with his head with the accent, everything, it'd be beautiful.
Listen, I believe my gift I am dropping at the Queen's feet will be accepted, and I believe that you will save me from getting my head chopped off. But we will see.
I think as well. I think Tim's got something pretty sexy for Queen's Court later today.
Yeah, we will bring it to your chamber.
I like it too.
Marky, how are you doing, sir?
Hey, Roblox got an option chain. I'm doing peachy this morning.
That was didn't take long. In fact, I think you and Matt were talking about that on the show the other day. Within like a week, you guys thought that they were going to get that option chain from recent IPO. Big, huge IPO in the markets recently. Communication service company, gaming company, and boom, there's the options.
I wouldn't want to be the market maker on this one, pricing in Roblox option chain in the first week. They decided to go a little high price on these ones.
Yes,
they didn't mess around.
They said, hey, if you're going to buy, you're going to pay to play. This is premium, baby.
One way or the other.
119 implied volatility.
And people like Mark looked at this and they're like,
hallelujah.
You just gave me 6 months of cash flow in a month. That's what you did. Oh, like when somebody like Mark looks at an option chain and they can buy a stock for $76 and they can sell a out of the money call option at $100 for $6, and they can bring themselves in a rocking 9% ROI in a month on a covered call. Oh man.
Let's just say Roblox found a way into my portfolio.
Oh, it found a way into all of our hearts with that one.
This is an
option maker.
We released episode 416 of the podcast yesterday on the long call strategy. Here's an example where I would not trade a long call option.
I'm not interested in buying that call option right there.
I want to sell.
That is a seller's option chain. There's no doubt about it.
That premium right there to new trader, they're looking at like, what is that? To people like Mark and Em, they're like, that's dinner, baby.
That's looking good.
Emily's looking at that. And
that's me getting back all my money back from Robux from all the time the kids have played.
Yeah, that's this ring right here.
I just got my Robux back.
Yeah, like 5 years of Roblox. I could get that back in 1 month. Oh my God, let's do this.
You think about how insane that is that if I sold that once a month for 12 months, it pays for 100 shares. That's how high that premium is.
You can go break even in 10 months. Now, obviously, it's done.
Oh, we're losing your audio there, brother.
We're losing your audio, Matt.
Check on that. Say lovey. You work on that for a second.
Your audio is not supposed to be lost till you start bashing on Jay Powell today.
Is this acceptable to the Queen, by the way? The Queen, can you put up with this audio type of problem?
he needs to take care of that as soon as possible, or it will be off with his head. He will be the first one to get his head chopped off.
Give it a shot. Let's hear it.
I'm rather enjoying your mouthing off while I have audio problems. Yeah. Hey, when Matt can't talk, let's all bash. Yeah, that's gonna work out well.
All right, let's start with the broad markets.
Hi guys. Hopefully it doesn't do it again.
Yeah, no problem. No problem. We all get it, dude. It's 2021. We've been a year through this pandemic. We get stuff like that. Let's start with the broad market technical analysis. Obviously, the S&P broad-based index has all the different sectors in it. It's kind of hesitating again here today after a nice close yesterday. Matt, I saw that your tweet out there with that hammer candle into the close. Markets actually ramped up a little bit in the last hour of trading. What are you reading here in the charts?
Yeah, I think everybody loves a hammer candle. There's no doubt about that. I mean, think about the anatomy. Think about the anatomy of a hammer and what creates a hammer candle. What creates that tick down there, Tim?
Well,
What
that's the
creates
low price,
tick?
the lowest price of the day.
Okay, so the market tests down, right?
Mhm.
So throughout the day, the market tests down, right? And then it fires back. But it doesn't fire back to neutrality. It doesn't fire back a little bit. It fires back in a no sell type price action where everybody's like, let's just hold through till let's just hold. Let's just hold. We don't care about the overnight. We don't care about Asia. We don't care about Europe. We don't care about Japan. We don't care about economic reports tomorrow. We know Jay Powell is meeting in a 2-day meeting that has added emphasis this go around. We don't care about that. It just signals that whatever transpired throughout the day, that the market doesn't care about it, and that should mean you don't care about it that much. And so I do like hammer candles, and you gotta like hammer candles at really kind of two areas on the chart. Specifically, when you're breaking out, that shows you pretty good strength as you're coming into the breakout, and then on your retracements coming into your known support levels, it's seeing that fire back action. I wouldn't call this a hammer candle. I got a different read on that. I'd give that more of a piercing line type candlestick pattern, but same type of concept, fire back, finish towards the highs. You see the price action following through. Same thing on a shorter time frame, single candlestick pattern. This time, fires down, bulls come in pretty aggressive on the lows, finish towards the highs. Typically has some pretty decent follow through. Now, obviously, everything in trading is variables and probability analysis, but again, typically hammer candles have a typical good follow through.
Marky, what about you on price action here on the broad markets? S&P, obviously, we're in front of the Federal Reserve policy statement tomorrow. We'll be talking about that a little bit later. This is the start of the 2-day meeting. Everybody's kind of anticipating that this week. We've had some hesitation here. We're getting good action in other sectors today, but on the broad market here, a little doji here. What's your read, Mark?
I mean, I think the market wants to run. It wants an excuse to run. I think Jay Powell, gosh, there are so many outcomes from tomorrow. Jay Powell says something the market wants to hear. Market rallies. Jay Powell says something the market doesn't want to hear. The market sells off. Jay Powell says something the market doesn't want to hear. Short-term sell off, and then the market says, screw it, let's go back to the party. They'll come around. I mean, so there's so many outcomes from tomorrow's meeting in the short term. I just think you let the price action. Jay Powell will speak tomorrow, and then after the volatility of it subsides, you go back to technicals.
And specifically on those technicals, we are seeing some sectors looking really good in terms of that perspective. We're going to take a look at a couple of them a little bit later. Communication services, technology, they are kind of leading the way today. And even REITs are making a little bit of a comeback. Matty, on these indexes, though, I love what the NASDAQ is looking at like right now. If you believe in the catch-up kind of theme and potential storyline here, you've been talking about this for a while. You were really pinpointing those last 3 candles in yesterday's show about, that clear intraday technical level. What are you seeing now that we're popping up above that 50-period moving average?
Well, I mean, these types, when you have time frames from a technical perspective that are not aligned, it does become a little bit more difficult. There's no doubt about that. When they do get aligned, that's where the easy money is made. And you've heard me talk about hard money versus easy money, right? Easy money is when intraday, day, and weekly charts are all aligned. It becomes an easy trading environment. When you have time frames that are not aligned, it just becomes a little bit more choppy, a little bit more difficult, and the read gets a little bit less clear. And so in the NASDAQ, we've been talking about this for the last week or so. As the NASDAQ was coming into those weekly retracement levels, and you see this on that weekly time frame, right? You see these weekly retracement levels here. And as the NASDAQ's coming down into these known resistance levels over here that was in the chop before the election, it's obviously going to test those levels here. Now, when you're looking at this, and obviously we're reading it today, but we do this every day in the halftime report for people that are new. When you're seeing this in real time, it does become very difficult, because here on the weekly chart, you see that type of price move. You're like, hey, okay, got a nice little retracement. But when you're looking at that on a daily chart, you see this type of chop, right? Boom, 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 boom. Just it becomes a very choppy, very difficult trading environment. Stop losses get triggered constantly. You get triggered, you get stopped out, and then all of a sudden the stock goes up 6%. You're like, really? You couldn't have done that yesterday? Really? You had to wait one day. You had to stop me out yesterday. It just becomes a little bit more difficult. And think about the psychology of what was being discussed in the broad market. Mark, what was being discussed here? What was being discussed here in the broad market to cause this type of volatility?
It was all about rates. 10-year
Rates.
yield going up.
Oh yeah, but nobody understands rates, Mark. Nobody truly, like literally, most
That's probably
people,
why they scare them so much, right?
Well, it's not that. It's a concept that scares everybody, and it's inflation. And so the conversations we're having as market participants in this time frame leads to an emotional fear, because we're talking about things that impact all of our lives. And so that causes that fear, that causes that chop, and it becomes a very difficult trading environment. And so when you're in these types of movements here, it's just on those longer time frames, it becomes a little bit more difficult. And so you just got to drop this, and you got to train your eye. And honestly, this is why I constantly say don't listen to news, because what the news is reporting is they're just reporting what created this volatility.
Mm-hmm.
They're not helping you understand it in any capacity. Like they're sparking that emotion on fear, greed, buy the dip, inflation, whatever it is. Well, to help alleviate some of what is going on to create this volatility, you drop that down in your favorite intraday time frame. Coach Frank loves that hourly chart. He thinks it helps smooth out the analysis for him. I like to get a little bit more of a micro read on it, so I drop it down into the 30-minute chart. That it's not going to give you that big of a different read on a 30-minute chart versus a 60-minute chart, because you don't have that much time frame throughout the actual day. But so you're going to get the same trend, you're going to get the same pattern. The hourly chart smooths it out a little bit more, which allows you to see it a little bit more clearly. You see that double bottom a little bit more clearly. You see that retest of the breakout channel a little bit more clearly right there on the test of the 200. You break out right there. So you can see the data a little bit more clearly here. And as you were seeing this recovery in the NASDAQ here in the last week, yeah, you could see this as just your standard bearish retracement, but that's not what my read was. And I hope that's what, as I was analyzing these things on a daily basis, what the community took away. When you're looking at this as a retracement, I can certainly understand why people would be like, oh, you got to fight through these things. I saw that as a failed low base, is what I saw that as. And when that's a failed low base, that means that when it breaks the base, that's establishing a new support level from an intraday perspective. Now you drop that down into that intraday time frame, and you can see that. Look at the prolonged base here. Look at the double bottom, double top. You break out of that, and all of a sudden, instead of just this 90-degree angle going up, coming into a retracement type analysis, you have a double bottom, you break out, you retest that double bottom, and then you fly. It's a different read when you break it down on an intraday. And that's why I said yesterday, you got to be looking at the NASDAQ here more as a K trade scenario, where you're looking at that 50-day moving average as a potential breakout, and you're looking at this bottom level here as a potential breakdown. And so you're looking at that as that K trade example. And where I was leaning was obviously the breakout with the catch up to the market. Now you couple that, no, I do think the NASDAQ does play a little bit of catch up, but I only think it's in the short term, because I think what you're seeing technically here more than anything is you're seeing a technical event with the NASDAQ breaking out of the 50-day moving average. Simultaneously, when you look at the strength of the marketplace, and we'll take a look at communications, because communication is pretty hot right now. when you look at the strength of the market over the course of the last month, 2 months, you can go back to 4 months, but really this main storyline over the last month, look at energy. Look how hot energy has been. Mark, you and I were talking about energy yesterday, and both of us like, yeah, we love energy, but we love energy a lot on a dip. A lot on a dip. And where could that dip come into? Maybe $50 would be really sexy. Maybe something a little deeper. I don't know, but we would love it on a dip. And the reason we would love it on a dip, and it's not just us, guys. It's many market participants. It's Wall Street, hedge funds, institutions. They're all seeing the same thing. They're saying, yeah, it's hot, but how hot? It cannot continue to do this. And so let's see it. Maybe we get a little bit of hesitation here. Maybe we get a little bit of a dip mechanic here in energy, and then we're going to gobble it up as it gets into 50. And while that cools off this momentum, why don't we go, because we're not going to just sit by, right? We're going to go do some other things. Let's go look at the NASDAQ, and let's see what's going on and see if we can play catch up a little bit here. And so I did see that a little bit yesterday's K-trade scenarios. I don't think you're all of a sudden saying, hey, listen, NASDAQ over comps, NASDAQ over energy, NASDAQ over, no, that's not at all. The strength of the market is still absolutely the strength of the market, and that is energy, that is industrial, that is the materials sector, specifically chemicals in that area of the market, that cyclical economy reopening up tied to the vaccine. That strength and that theme is still very, very strong in the marketplace. But again, when you're looking at industrials, don't you have a short-term read that it's slightly overextended and maybe needs to settle down a little bit?
Of
When
course.
you look at energy, maybe settle down a little bit. Maybe energy can't go up 26% every single month. Maybe we need to settle that down a little bit. You see some short-term rotation into tech with some undervalued areas of the market. It makes sense to me.
Mark, what are your thoughts on sectors here today? Obviously, I love Matt's analysis on that. And yes, industrials, energy, financials, they've been the leaders. It's not like we think they're dead or going away or anything like that. Let's not get crazy. Nobody's saying that, right? No, it's
just give us a flag.
Yeah.
I said dead. I'm just calling for a flag or a base. That's all I'm saying.
Nothing wrong with a little profit taking up there on the top.
They are simmering down. That's all they're doing.
Yeah,
it's just a simmer down.
Yeah. Mark, anything to add to these sectors, for a minute here, and in terms of analysis?
Now, listen, when you're in the midst of long-term trends that last 6+ months, I mean, think about tech last year, think about FedEx. Listen, things don't go up every day. That doesn't mean the trend isn't there. That doesn't mean that's what isn't going to be leading the market. The consensus is amongst everyone, right? And something can change, value, reopening, all of that. But that doesn't mean it goes up every day. And that's what I love when dips come and new consolidation patterns form and breakouts, dips. This is what makes traders. This is what makes traders. So no, I mean, until you see something thematic change the whole reopening value shift, it's still where I'm going to be.
Mm-hmm. Mm-hmm.
Can I'll play around with paint for a second, Tim.
I love paint.
I'm gonna play around with paint for a second, so I can visualize
real quick though.
About.
Can you switch mics? Do you have a second mic, webcam mic? Maybe.
Is my mic not going through?
It's not good.
It's not scratching on us. We're just losing it every once in a while.
Yeah, you're good.
How's that? Let's try a different mic.
It's going to work
better.
We'll make it
better.
Yep.
Okay.
Yep.
Nope. I'm still going to need to hear you guys. Okay. I was going to toss my Logitech mic as hard as I could against the wall. So hold on a second. Give me a second. Hold on. Now I'm good. Okay. Now, what I want to show you, I was talking about that analysis on the NASDAQ from an intraday perspective, right? And I was talking about how the intraday analysis in these retracements can give you a little bit of a different read. And so when you're looking at when you're looking at a standard bearish retracement, okay, on an intraday time frame, on a daily time, whatever it is, your standard bearish retracement will look something along the lines of this. It'll chop, but you have that nice angle still going up, and then it slows its momentum a little bit, and then you get this triggering action underneath that support level, right? So you get this standard type 45 degree angle up. It then triggers with slowing momentum, and you get that nice little read. That's not what we were seeing on the NASDAQ. What you were seeing is this type of price action. And when you see this type of price action, and then you see that, what is your read right here? Emily, what's your read right there?
Well, that is a test of that old resistance level. So it doesn't break it. So that's your new support level. So
Okay.
you forget about all that choppiness that was down there before. That becomes your new support level.
Right? But when you're just when you're just doing the 45 degree angle up, you don't have that. You don't have that. You don't have the time frame to create that support level. And so when you're looking again at the NASDAQ and coming down to that hourly chart, you see that wide range W pattern. Obviously, it's very, very volatile on a daily chart. You see that volatility there. You see that wide range here, breakout, retest. It's not surprising the NASDAQ confirms and runs. That's not surprising. That's exactly what should transpire. And that's why I called for the K-trade analysis yesterday.
Well, and that's why it takes time for a lot of these technical patterns to develop. I mean, think about it. We've been talking about the development day by day by day by day by day. You've analyzed that. That's where pivot point analysis comes in. Intraday analysis comes in. It leads to the whole thing. So I love it. Yeah, very, very, very helpful right there.
Well, and that's also the analysis you want when you're looking at buy the dip.
Yeah.
It isn't a random, oh my goodness, stocks are down by the dip. That's not what it is. Buy the dip is wait for your reversal, then push your chips in.
Yeah, I love it. By the way, across all the other indexes, obviously the Dow and the Russell are hesitating up here with financials and energy. They're heavily loaded with that, like you've been talking about. Let's move into commodities next, if we can, and quickly run through kind of crude oil, gold, spend a little bit of the time on the dollar because I do want to get a Fed preview from Matt. But let's start with Mark with commodity analysis. Mark, what are you seeing in the commodity markets?
Crude oil taking a break. Listen, anytime you get really overextended, if you could put a weekly chart up, this is what I cover in the commodity report. Anyone that's followed me on the commodity report knows this from copper because it's happened several times in the last year. And whenever you get too far overextended from that weekly Janet, the 9 EMA, commodities take a break. That is the norm. That is not the exception. That is the norm. You go back and look at copper several times this year. It's had nice runs up, and then you get too far overextended, it takes a break. You get too far overextended, takes a break. You get too far overextended, take a break. These are huge, massive markets. These aren't penny stocks. These are huge, massive markets, and there is a natural ebb and flow in the strongest markets. So with energy, look at the energy, we got too far overextended a little bit back in December, takes a 3-week break. Get a little overextended, takes a break. Get really overextended, takes a break. This is normal. In the healthy, gigantic, bullish trends, this is really normal. It sets up nicely for cash flow, and it sets up nice for that next opportunity, either on a deeper pullback or on a break. It's very healthy, very normal. Bull market in oil is still here, and it's not even really debatable. This is just normal, healthy price action.
That weekly chart is so smooth, obviously, and it's still holding the 9 EMA up here with a little chop over the last week or so. Taking a break here, Matt, up at the top. I don't think crude oil traders can really complain about $65 a barrel after such a run they've had coming up from the mid-30s just in November. Anything to add to crude here?
No, I think crude is entering in its cash flow environment, quite frankly. I think people should stop anticipating the type of directional movement the crude has been doing.
And that would not be bad for energy stocks as well, by the way.
No, it's consistent with everything I've said over the last 6 weeks in energy.
Yep. Quick peek at gold. I don't see much in that chart to update here today. Mark, anything?
Gold's going to take some time.
It's good. It is taking some time, hanging out. 4 candles, kind of round the moving average, a little bearish retracement. Anything you guys want to add to that one?
Nope.
Moving on, the dollar here. Matt, Fed preview, just simple. What do you expect? You know, obviously the dollar's not doing much in anticipation of it. We're going to have the report tomorrow.
What do I expect? That's a very open-ended question. Where do you want me to go with it? Because it's the Fed.
Well, will Jerome Powell signal clearly to the markets his intentions of what they're going to do with inflation?
He hasn't been wanting to do that in the last 6 months. I'm not sure he's willing to do it tomorrow, but the market doesn't want it.
Market wants it. So if the market doesn't get it, do you expect volatility? Do we just have to?
I think most of the time we talk about these days and then they just come and go. I think that's most of the time, right? I mean, I remember back in the day, Tim, when they were doing QE Infinity. Oh my goodness, the emphasis us traders would put on Fed meetings. And every time it's like, man, you got to be there. You get on that. You can't even get on a minute chart. You got to go get on a tick chart. Come on, let's lower the time frame down to the microsecond. And it's just like it would come and it'd be like, oh, they didn't say anything. Okay, they didn't say anything. They hardly ever say anything. I do think there's added emphasis on the Fed this week, though, and I think the market showed their cards last week when they kind of puked up Fed commentary out of Powell, or a week and a half ago, excuse me. So I do think there's added emphasis on there, and especially given the fact that from a fiscal situation, we're done with fiscal policy for a while, guys. I mean, when you understand Keynesian economics, you understand these things happen, right? And then they get done for a while because they have to be done for a while. And so we're not going to be talking about, you know, fiscal policy coming out of the government for quite some time now. And so the Fed, who begged to get out of the spotlight for about a year straight, you know, starting literally during the pandemic, is like, we got zero interest rates, guys. We're putting all the money out there that we can. What else do you want us to do? And ever since that moment, you know, they've been begging for the fiscal side to step in and take over the conversation. The fiscal side did that. Last June, last May, we had the first, or last about a year ago now, we had the American Recovery Act, and that put in like $2.3 trillion. We had another $600 billion one, and now we have a $1.9 trillion one. We're done for the time being, though. And so I think the market at this point is looking at the scenario, and we're looking at an economic situation that is still dire. There's no doubt about that. It's still dire. And we're in the middle of a very important recovery, a very, very important recovery, where literally yesterday we just hit a record number on vaccine, like daily dosage of vaccines, which, you know, we've talked about that being tied to the economy reopening up. And as long as they continually improve in vaccine distribution, and you got to give credit where credit's due and call balls and strikes, and vaccine distribution has been very, very positive so far. And so they're all on their metrics to hit this recovery. And yet now what's the Fed going to do? And so a lot of people are like myself are looking at the Fed right now and saying, okay, we're past all this other stuff. We still got the garbage. What are we going to do about it? And so I think the Fed, there is added emphasis on the Fed. And the open question that I have is do they reference Operation Twist? That's where Jay Powell has been criticized by many people in the marketplace ever since he gave that speech a week and a half ago, where he failed to discuss monetary policy in terms of Operation Twist. And the reason Operation Twist, just go listen to the podcast last week, but Operation Twist is the Fed tool that they would utilize in an environment where they want to bring down the short-term bond market without actually, you know, making an announcement to adjust the interest rate. Because again, think about it like this, guys. You have the short-term bond price, you have the long-term bond price, right? Right now, the short-term bond price is inching up to offset inflation. And so the yield curve is steepened, correct? And so what they want to do, and what yield controls are, is they can try to control the yield curve from steepening to what's called flattening. And so instead of a steep curve, they've tried to flatten the curve, and they do that through Operation Twist. And so when the curve gets too flat, they do repo actions to steepen the curve. And when they gets too steep, they do Operation Twist to flatten the curve. And so because the storyline right now is the curve is too steep, the Operation Twist is just in the wheelhouse. And so I think there's market participants and many market participants that are simply anticipating if Jay Powell gets if he gets an opportunity in the Q&A. Nobody expects the policy to shift tomorrow. And so like Tim, I gave you the over under, what, 13 words they changed in the policy number?
13 words was your over under. Yeah.
Okay,
I took
13.
the over by 1 or 2. I took
Yeah, so
Close.
we know their policy isn't going to change. We know they're not adjusting the interest rate because, again, if the issue is the steep curve and you lower the Fed fund rate, that doesn't impact the yield curve because that lowers everything. Does that make sense? And so it doesn't make sense to lower the interest rate because that wouldn't fix the problem. And so again, many people want to know if Jay Powell's thinking about Operation Twist. Personally, my own personal opinion is I don't think it's needed. I still believe that what the bond market is doing is simply reverting back to pre-COVID pandemic levels that makes sense, 2+2 style, in an economy reopening up thing. And so I don't see anything discerning in the data so far regarding the economy reopening up and inflation, because again, inflation will run a little bit hotter than normal in an economy recovery with the backdrop of how much stimulus we have done. That should be understood by most market participants. So I think we're a little bit premature personally on having the conversation of Operation Twist and give this bond market a little bit of time, because guys, at some point we got to stop manipulating a free market. And I do believe that outside of extraordinary circumstances, we should not manipulate a free market and let the free market dictate where price goes. It's called price discovery. Let us discover it. That's all I'm gonna say.
For me as a trader and an investor, I don't get worked up too much about Fed meetings from a long-term perspective, because usually the actual meeting is not what moves the market. But this one feels a little bit different here, Mark, just because of the volatility we had around Powell's statements a couple of weeks ago. Are you treating it any differently, Mark? Are you approaching this in a different way? Are you selling volatility into it? Just what are your thoughts around this?
I mean, I've been a little cautious, right? Like the last few trading sessions, but I'm like that on anything, like, into a monthly unemployment report that I think might matter, a Fed meeting that I might matter. I treat these like these mega earnings events that are macro in their scope. And so I do my normal things. If I see opportunities, I take them. But, to be honest, ever since the volatility picked up 3 weeks ago, the craziness, right? The oh my gosh, stocks only go up, and the carefree carelessness that I got caught up in a little bit, I'm sure, with many other traders. I've scaled back and done a normal approach anyway. So, I've been doing a few things this week. But I haven't been going crazy. I'm going to wait to see market reaction opportunity. So, I'm trying to, have my cake and eat it too in this situation, where I do a little bit, but still exercise caution. I certainly haven't exited any of my loved positions heading into the event. We'll see how how the old Jay Powell treats us tomorrow.
So you're doing 15 over on the freeway. Go ahead, Matt.
Finish your analogy.
No, you were doing 15 over on the freeway a few weeks ago, and you saw the red lights.
I was probably going about 27 miles
27
over.
Yeah.
So now you're doing the speed limit. You're just
now I'm doing the speed limit, right?
Is that kind of where?
Well, yeah, because and not to get into it, but I didn't have the money I wanted to buy the dip. I had to manage positions because I was just pushing it a little too far. And so
traders see that.
Yeah, I'm back just going to the speed limit right now.
Speed limit trader. Okay, gotcha. Anyway,
Matt, I get it. It's always going to spark emotion in front of the Fed, but what's the Fed going to say that the market's going to see as negative?
Yeah.
No, I'll wait till I hear a response.
I can't imagine he's going to come out and talk about rampant runaway inflation that is a concern, and they're going to start doing that stuff. So I can't imagine what they're going to do. They're going to try to approach this with kid gloves. I believe that as well.
I mean, I see this as a return versus risk scenario, and I don't. If the Fed, if Jay Powell just repeats what he said last week, yeah, we already know it. Like, what's the market doing? Not buy?
Yeah.
Okay. And if the Fed mentions Operation Twist, and that the market's going to celebrate that. So I see this as higher upside than downside.
Yeah.
It doesn't mean the downside can't happen, guys. This is trading. Disclaimer 101, right? But I do believe from a reward to risk, Tim, if you saw this from a reward to risk trade, don't you have higher return than risk there?
I believe so. Yeah. I'm adding new positions today, actually. So.
And so is everybody in the NASDAQ.
Yeah.
So yeah, the market's buying in front of it. There's not a lot of concern. The market just broke out, guys.
Yeah. While we're talking about Fed, the dollar, the whole broad market, there were a couple of economic data or points that came in over the last 24 hours. Retail sales were reported, dip in February. They're expected to pick up in March. It's kind of a nothing burger there. Just they didn't have the stimulus check. Stimulus in January spiked them in January. We expect that to improve. I did say a national housing market index from the Home Builders Association come in.
So we're going to cut everybody a check, and they're just going to pay their bills, right?
I don't think
so.
So.
Or do you think we might see a bump in retail sales next month?
I guarantee you do. So okay. I think you'll see a little bit of both. They'll pay some bills, they'll spend some money, they'll do a little bit of both. We know the American consumer, right, Emily?
Yeah, and to speak on that, I mean, I know a lot of places have kids have gone back to school, but this is the first time our kids in Maryland are going back to school. So we have to start thinking about back to school shopping in March, where we don't even do that, right?
Yeah.
These kids have been in pajamas literally for a whole year. And, I have to think about, okay, I need to go get these kids some clothes because they're going back to school in April. So yeah, people are going to spend.
I think what Emily's saying
because of the whole reopening thing.
Emily, is what you're saying is Walmart to buy? Is that what you're saying?
Well,
I think because that's what I heard.
Target,
Walmart. I heard kids going back to school, stimulus checks. No. We're stimulus checks. We don't buy Nikes. We're going to Walmart.
You don't know my children.
That's a good point.
Yeah.
Okay, I'm going to buy Nike too. I'm going to diversify my discretionary play on Emily, and I'm going to buy me some Nike and Walmart.
Yep.
Well, Nike's got earnings coming up. Maybe hold off on that.
I'm going to treat Nike like a penny stock.
Retail. Oh yeah, there you go. Who cares? Anyway, the retail. Not much else in the economic data here to grab my attention. Home builder, survey is still very, very strong. A little bit down from November, but still very.
Can I get Matt's read on Bitcoin? Technical read.
Yeah, let's do it. That's next.
Are you wondering from an intraday?
Yeah.
Okay. All right. Intraday analysis. First of all, you're really, really choppy, and it definitely needs to settle down on the daily mark, right? But if you're thinking about a seller, and just very quickly on the daily chart before I give you the intraday, don't you got to be slightly encouraged as a Bitcoin bull? And you definitely are a Bitcoin bull. It's a major part of your portfolio at this point.
Yep.
Don't you got to be a little encouraged with the snapback action on the wicks here? Like 3 days in a
there's
row.
Definitely buyers coming in, right?
Well, yeah, and 3 days in a row, you've had some degree of negative news on Bitcoin, including one day where it was like, oh my God, India is going to end Bitcoin. It's like, come on, dudes, let's get it together. So you've had some negative news in the crypto space over the last 3 days. You had an overextended technical read, and you had every reason in the world to sell off here. And so before I break down the intraday technicals, I do think that's a positive for Bitcoin, even though I do think that the daily chart needs to settle down a little bit. Let's break that down on that 30-minute chart here and look at some key resistance levels we need to concern ourselves with. First and foremost, the snapback you're seeing, here's that snapback. Look at that fire off action there, Mark. Look at that fire off action. That's really healthy price action. And that just also coincided with the European Open as well. And the European Cash Open does play a role in crypto analysis the same way it does in Forex trading. You look at that fireback action here, that's on the Indian news. Stuck the landing fireback action. This is on the lows of on Saturday fireback action. So every time it's tested lower, including the massive Indian news headline that Bitcoin had to navigate from the last 24 hours, it's maintained. And so I do think that is positive. And one of the reasons why you're seeing that maintain is just the defensive nature. And this, I think this is important, guys, the defensive nature that it plays in this environment. Guys, we talked about it in the halftime report. I know Mark, Tim, and myself talked about it a lot outside the halftime report, but how impressive was it to look at Bitcoin in an environment where tech was getting just murdered? Like Among Us, Emily with the stab in O2. Like it was extremely impressive to see Bitcoin hold the line in an environment where it's been tied to the NASDAQ, and the NASDAQ kissed the line and then literally just died.
Mm-hmm.
And so I do think it's very impressive, the defensive nature that Bitcoin played in that psychological environment. It held the line technically. And I think that's important, to hold the line technically in an environment where you have every reason to drop. That's impressive. That might be playing a role over the course of the last couple of days in this snapback and the defensive nature in the face of some pretty damning news. I mean, I personally think what India is doing is a nothing burger. I think it's a marketing campaign for Bitcoin, quite frankly, but that's me. What do you think the rest of the people in the world see when they see India, wanting to outlaw Bitcoin?
Well, it's going to cause a little bit of short-term fear for people who don't have context in history.
Yeah, like context in history is like more than 3 months.
Yeah.
And so I think it's very, very impressive that Bitcoin has played defense against the tech sell-off. I think it's impressive that it's played defense in the face of major geopolitical news coming out of India. And so I do think it's a positive. Now, when you look at this from a technical perspective on the intraday, this stuff needs to be cleaned up. There's no doubt about that. Like I said, on the daily chart, that needs some time, needs to settle down. Well, you see that on the intraday chart. This needs to settle down. It's very difficult to get a very good read. But in the short term, you have a couple things to keep an eye on. Number one is to see how Bitcoin's going to navigate 55K. And I'm just talking intraday, right? I'm nothing major here, just intraday type time frames. 55K, if you look at it here, old resistance, look at that tick right there, Mark. Look at that tick. Look at that tick. Look at that zone. Look at that zone. 55K is going to play a role here. So I do think you're positive above 55K, but your real line in the sand is 54. So those are your two support levels. You're really navigating on the downside as a bull. You're saying, okay, if 55 doesn't hold, fine. I got a backstop at 54. 54 is the line in the sand. It breaks. We go down to wherever we're going to find support. Maybe that's 50K. Maybe that's lower than 50K. But that's what you're looking at from a support level. Resistance levels, you got chop, 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 chop. You got chop, 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 chop. Bitcoin can destroy chop. There's no doubt about that. But you got a resistance level of 56.5. You got a resistance level of 57.2. You got a resistance level of 58.2. And so before any new triggering action happens, you need to clear this area here. That's my read. You need to clear this area here because you got too much action where it hits something, comes right back down. Hits something, comes right back down. That's mixed data there. You give it a little bit more time, that data smooths out, cleans up this area of the chart. All of a sudden, now we're looking 2 days into the future over here. Now we got 2 more days of intraday data. And this is what happens, guys. All this nonsense, 2 more days, we're not looking at anymore. We're looking at this stuff. And then we're looking at triggers. And so I do think it needs a couple of days to settle down. But overall, Mark, I've been very impressed by the defensive nature that Bitcoin has played in the face of 2 events that historically send Bitcoin down and violate support. And yet no important level of support was violated in any capacity, in any of this volatility, guys. That truly is astonishing.
Yeah.
Not a daily support level that is non-momentum based was violated.
So if I'm, as a Bitcoin bull, if I'm hearing you right, to the moon, is that?
Not what I said.
You can hear what you want, I guess, but that's not what I said.
Not what I said. I said you should be encouraged. And if
I heard what I want to
think-
hear. You know?
If you think the word encouraged means to the moon and diamond hands with a little bit of coal dust on them, you do you, bro.
Listen, I heard what I want to hear, you know, so thank you, sir. Thank you.
Yeah. Hey, Matt, give me your thorough technical breakdown. To the moon then.
So he was asking all of this just so he can go trade Riot, right?
Yeah. He's like, all right, Matt, okay, Riot, let's do it.
Is Riot down today?
It doesn't matter.
That's the only reason why he asked is because he wants to go trade Riot.
If you wanted me to analyze Riot, I could have given you a much easier read. It would not have taken me near as much time. You just got to know.
Oh, because listen, this stuff, you know, listen.
58 mark.
The
That's
dog.
line and Sam. 58 by 57.
No, Bitcoin's the dog. I don't care about the technicals on my miners. Bitcoin's the dog. These are the tail.
Yeah. And I did love the technical read on Bitcoin, by the way. That was very, very helpful.
It was
Matt.
very nice.
Let's move into stock talk here, guys. Only a couple of corporate items that I had, kind of a light news day on that regard, but there was a few that grabbed my attention. News Corp and Facebook, FB, just announced here today that they're resolving a dispute that they were going to withhold a lot of the media content in Australia. They actually came to some kind of agreement on that. Facebook is a part of communications, picking up some steam here, obviously not just because of that news, but the general move in communications as well. Matt, is there any interest you got here in this Facebook chart? It's been consolidating for a long time, but picking up off the 200.
I want Facebook to settle my dispute.
Which is?
I maintain that Mark Zuckerberg is the first alien.
I thought
That's
he
my
was
dispute.
I thought he was a cyborg or something. Alien.
Dude, he's somewhere from Star Trek. That's all we know. He's some version of Star Trek. I personally have zero interest in Facebook, but asking me my interest level on Facebook is like asking my interest level in Deutsche Bank.
It's a messy chart, though.
Y'all are gonna get us banned from Facebook. I think Zuck.
Everybody on the planet has been calling Mark Zuckerberg a cyborg. That's not new news.
Zuck would ban me for other things I've called him.
We all have suspicions as well.
That's the kid glove version of Zuck conversation.
That's right.
That's true. I'll never forget. He made a comment. He said, "Back when I was human." I mean, I'm still human.
I know.
It's like,
no, you're not. No, you're not. You're not human. But back to the company here, you know, I think people are looking at the 200-day moving average as a catalyst. I don't see that. I see this as long range neutrality that the 200-day moving average caught up to. I don't have interest.
Pulled into. I got to get Mark's take on Alibaba. Mark, have you been seeing any of the chatter around the Chinese government slapping small regulations here and there on making them dispose of media assets and all that kind of stuff? I've been seeing a few headlines popping up.
I've seen. I mean, they've been doing it. It's not just Alibaba. They've been doing this on a number of companies. Some not. I mean, obviously Alibaba is a huge company, but they've definitely been poking their finger into the dealings of companies as a whole.
Too much lately.
Mm-hmm.
You
I know. I've noticed it more and more lately. I don't. Yeah.
So
Makes me not even want to. Go ahead.
Yeah. Mark. No, seriously, like company like Tencent and stuff like that. So I mean, I don't know what the objective is. I don't know if it's a reining in. I don't know if it's a control. I mean, obviously there was the Jack Ma criticism, and that got Alibaba, but it's not just Baba. It's some of the bigger companies as well.
Well, and they're also trying to rein in some of the excess that they've done through the pandemic. Like they made the regulations over the banking system a little bit more strict over the course of the last month as well. You know, in the last 4 months, you got the Baba situation, obviously, but you got the Jack Ma, which was really weird, Mark. I mean, that Jack Ma situation was really weird. Jack Ma is one of the most renowned entrepreneurs, capitalists out there. I mean, he's the face of the Chinese capitalistic type thing. Mm-hmm. And like, they just said, go away for 2 months, just bye, like house arrest type style. Okay. And then, you know, it's just, China's doing some weird things right now, and I don't trust it at all. Then again, I don't trust much about what China does.
Yeah, I agree. It's kind of making me a little bit hesitant to trade these Chinese companies in the short
Yeah, me too.
term.
Me too.
Because there's better.
Hey,
there's
Tim,
better setups.
let's play the latest game. Okay. China or the US?
I don't think there's a debate.
Okay. Wait. Come on. We played the game and we always analyze it. And then what's always the answer?
US markets over Chinese
You
markets.
never bet on the Chinese markets over the US markets.
Yeah. And
Only in the short term. Only in the short term for some type of position or seasonality.
Sure.
But speaking of that, no, I have zero. Move on. I have zero interest.
Yeah, it needs to develop.
I have zero interest in China right now.
Yep. Couple of quick other ones here. Just give me Starbucks. Only actually 2 upgrades I want to talk about, not too many. So we'll just do a couple of quick ones. Starbucks got an upgrade to a buy from BTIG. We've been talking about some of these types of areas of the market. Matt, a little breakout there as well. Nice looking chart. What are you seeing here?
I think Starbucks had a buy on or scatter report is what they had.
Got vetoed, didn't it?
More people finding tactical content. That's a beautiful thing. Congratulations.
Yep. I agree. Twitter had its price target raised all the way to $80 at Citigroup from 55. This is one of those old analysts playing catch up.
Citi had the courage of the convictions to call a swing trade target. That's all awesome.
They had the courage to upgrade their target that was $15 lower than the current stock price. So.
Yeah, good job. Good job, Citi.
And then
I would like to know like how they didn't catch that one. Like, did somebody not be? Is somebody not like, what are we doing? Like, does Citibank have anybody in their analyst group that says, "Hey guys, what are we doing?" Mm-hmm. Like, not what are we doing for lunch? Like, what are we doing in life?
I'm not sure they have those conversations at the analyst desk table. I think probably somebody's like, well, "Are we going to eventually upgrade this thing?" Yeah, move it to 80. Let's just do it. Move it to 80. We're good. Another price target upgrade on United Airlines, by the way, last one. And I'm going to leave the other one I had for a minute because I think it's part of Mark's pick. But UAL got a price target upgrade to $74 at Goldman Sachs from $54. Obviously, catching a breakout here recently. It's been one of those reopening themes. UAL and part of the airlines this week's had a good move.
See, Goldman knows what they're doing. Goldman knows technicians. That's a legit target.
Yeah.
And that's not a swing trader target. That's a legit position target that if you think recovery is going to continue.
I agree.
Like the difference between the level of analysis at Goldman versus Citi is laughable.
I agree.
Truly laughable.
Which is what we can look at the charts, Goldman Sachs versus Citigroup, and you can kind of see.
I mean, I got my disagreements with Goldman too, obviously. But that's typically just because they're the evil empire, not because they're wrong.
It's not their analysis, and it's not their
not their analysis.
No, it's not. No. All right, guys, that's it from Stock Talk here today. What we're going to do next, though, is we're going to enter the Queen's Court. You are, Your Majesty, you have your loyal subjects here. We have brought you spoils.
I get trash, and you get the Queen's Court.
That's right.
Dude, we got to follow up with the Queen after Monday.
We gotta clean it up a little bit.
I'm gonna let you hold court, Queen. You run the segment as you see fit, Your Majesty.
Okay. So I hear that you all have some picks that you have brought to me. Is that correct?
This is true.
This is true.
It's true. I got something sexy. Tim's got some sizzle. He's got a little sizzle.
Mm-hmm.
I got sexy.
So are we doing this? Are we doing this like the actual Queen? Like, somebody comes to my chambers and says, Your Majesty, Lord Justices.
Hey, Queen. I was talking to Tim because Tim's like, Matt, I don't get why you have these personalities when you play games. Like when I'm playing a game of zombies, I'm like this dude from this movie, and I'm Captain Jack, right? I like getting into personalities. We're in a pandemic, and I think all of us, it's okay to act like our inner 12, 13-year-old self and have a little bit of imagination and creativity. I love it. Mm-hmm. I love it. I absolutely love it. So I'll come to court. I'll come to court. I'll play the
who's
game.
coming to my chambers
I'm
first? I see the
coming.
problem is that you all are justices, so I have to give you guys new names now.
My name is Duke Justice. Thank you.
Justice.
I come from the lands of the north. We come from the mountain regions of Utah.
And
Other people pronounce it as Utah.
And I am but a humble squire, my queen.
He is my servant, my
right.
man-child.
I am here to do the heavy lifting and the work. You know.
I already love this game. I can call Tim man-child. And he can't get offended. This
Maybe
is
I'm the
beautiful.
court jester. Maybe I'm the court jester.
No, Mark's coming in.
All right.
Oh,
We got this whole
boy.
thing.
All right, who dares go first?
I tried to. I thus go. I'll go. Okay, so Em, here's my pick. All right, gamers. Okay, and I'm not talking about the gamers out there like my dude gamers. I'm talking about the gaming companies out there. See, Activision, EA, Roblox. You throw Roblox into that group now.
Mhm.
I see, with no pun intended with SE, but I see there's only really kind of three plays here in the gamer space right now. And I think you got a unique opportunity in the short term in the gamer space. And I really think, I truly do think it really comes down to three. And that is not the same three that was historical. The three gamer companies that typically people would look to when they wanted access to the gaming industry would be Take-Two Entertainment. You obviously have your Activision there, and then you have your EA Sports. And so you had Take-Two, you have EA, and you have Activision. And obviously Activision was our favorite of the bunch there. It's been a Tackle 25 stock for what now, 4 years, 5 years, Tim?
Mm-hmm.
I think we've had this debate before, but I don't remember what we settled on.
It's one of the other.
But it's a company we really, really like. Well, SE here has C Limited, obviously, Gaming International company, just an absolute juggernaut. It's actually a massive company, $120 billion company. C here trading very similar to Activision. When you take a look at ATVI, you see a little bit of a short-term bearish retracement in a longer-term bullish uptrend. You have C here, short-term bearish downtrend in a longer bullish uptrend as well. And so you got a very similar technical read. You look at these on the weekly chart. See here, you got a nice little bullish retracement on the weekly chart. You have Activision. You have a nice little bullish retracement on the weekly chart there. And so you got a very similar read on SC, and you got a very similar read on Activision. The third stock I would put, I would dare put into Queen's Court, because if I put some trash garbage $2 billion stock that really is a $2 million stock, like I'd be thrown out. I'd never get an audience in front of the Queen. So I'm bringing you some the cream of the crop here in the gamer space. I will throw Roblox into that discussion in terms of if I were to tier list this, tier A tier, right? Top tier, you got Activision, you got Roblox, and you got C now. Okay, those would be my first tier. Everything under that, we don't care about that trash in the Queen's Court. We look at the best here. Roblox, I think we're a little premature here. You know me, Queen. I like it. I like an earnings report. I like to see some numbers. I'd like to see. I like to at least visualize a path to profitability. I like to know where we're going here. But more than anything, honestly, I want to see how the market's going to react to earnings. I want the market to show what their real hand is, and earnings is their first opportunity to show the market's real hand. And so I want to see that. And so Roblox, I love Roblox, and I think Roblox long term is a wonderful, wonderful opportunity. I just always like time frame when it comes to recent IPOs. So I can't do Roblox, although I think somebody else might be doing that. I want to look specifically at C versus Activision. And M, this is for somebody that does not have, let's say you have 10% of your portfolio in communications, and that's your number. Well, you don't need Activision then. Let's say you have, C, and you're like, well, should I add Activision? No, you don't need Activision. This is for somebody's portfolio that is looking at the portfolio and saying, you know what? I love what's happening in communications. I love comms. You want to talk about Bitcoin not getting caught up in the tech volatility? Comms should have got caught up in the tech volatility, and was actually more defensive than even Bitcoin was. Very impressive out of comms. Recent breakout in comms. Look at that weekly breakout right there. 4-week hesitation, breakout, and run there. So you got to like comms. This is for somebody that wants some emphasis in communications, and they're looking at communications saying, listen, I like those gamers out there. I'm seeing an opportunity in either C Limited or specifically Activision. And so when you're looking at the gamers, I feel there's only two that I would consider the blue chip right now. Okay, right now. And that is C and that is Activision, because again, we need some time, in my opinion, on Roblox. And again, I'm just talking directional here, right? Options are a little bit different. I'm just talking directional. So you're looking at C versus Activision. Now, Queen, I'm not looking swing trade here. I'm looking a little bit longer term. Okay, I'm looking a little bit longer term. Now, because I'm looking a little longer term, I'm also going to take a little bit into, I'm taking a little bit of valuation and fundamental analysis into my conversation here as well. Since I got a very similar read on C versus Activision, the tiebreaker for me would be the valuation. And so in an area where there's been a little bit of growth concerns, C is a little bit more growth than Activision is. And you can kind of see that on the chart as well. And so when you're looking at C, you're talking about a company that does not have a PE ratio, that does not have a PEG ratio, that has a price to book that's at 33. You're talking about an extremely overvalued company right now. An extremely overvalued company right now. Again, similar technical read to Activision, but to me, the difference is very simple. This, on Activision, clean trigger above 96, clean trigger above 96. That would be the weekly confirmation number as well. And so above, and you can give it like 95.5, and I'm giving it 96. You go above 96, that is your weekly confirmation. Now, because it's a little bit more prolonged, longer term view on Activision, where you can do some covered calls and so on and so forth, Activision is a wonderful covered call type stock as well. You got all the liquidity that you ever need in Activision. But back to the fundamentals, unlike C, once again, very similar technically, but unlike C, Activision has a PE ratio at 32 right now and a forward PE ratio at 23 and an infinitely better book value. The valuation obviously puts it into Activision's camp. I like the short-term retrace, the short-term bearish downtrend as a buy the dip candidate for a prolonged longer-term position trade with a sprinkle of cash flow on it when needed, and that is Activision. I compared against Activision against C and against C specifically because those two are the leaders in this space from a price performance perspective. C's fundamentals not nearly as good as Activision's fundamentals. That breaks the tiebreaker. My pick is a position trade on Activision.
Let me see the weekly one more time on C.
C's weekly sexy. It's sexy. It's consistently sexy.
Oh, do I give my judgment now, or do I have to wait for everybody else to go through?
Queen, it is your court. Literally, you can
You do whatever you want.
our heads.
It's your court.
Oh,
You can do whatever you'd like.
If you want to see a comparison against some of the other charts,
No. You gave me the best three. I do like that darling and roadblock that's coming up, but like as you said, I also agree with you. We do need to see a little bit more information. It's just starting to chug along. It's been on the market for a week. So
Five candles isn't enough for the queen.
I am not going to confirm or deny I did not buy
Listen,
shares
if this
for my
was a real
children's
court, the
IRAs.
over under of me surviving like a week in the Queen's Court is minimal. I would be dead.
You and I, we do trade. We do trade similar.
It wouldn't work out very well for me.
I do love the darling roadblocks. That I do love that. But like you said, we do need some more data. But again, I cannot confirm nor deny that I did not buy some shares of my children's Roth IRAs. But back to Activision and C. I like Activision for cover calls. It's a nice price. It's, it's cheap enough that somebody can afford to do 100 shares, or even on margin, they could do that. I love C on that weekly.
It's sexy. The weekly chart is absolutely sexy, and they got all the liquidity you need to write cover calls on C as well.
But
go ahead.
I would be doing our Tackle 25 a disservice if I did not go with Activision.
Go against Tackle 25.
I'm going to go with Activision.
How do you go against Tackle 25? It's got an amazing track record.
I cannot. But I do love that weekly on C. I got to say, I love it. But I will.
I'll tell you, if it was a pure directional trade without a sprinkle of cash flow, I think C is the better play. Honestly, if you're looking at growth, I think C can hit a bigger home run than Activision, no doubt about that. If you're looking for consistency and technicals, C wins the game here.
Beautiful.
That's very sexy, right? Both of them very similar triggers, right? We got one above 240, got one above 96, but both very similar technicals. The technical rate, I would say C is slightly better technicals, but I think when you have the ability to sprinkle a covered call in a position trade when it's needed, I think that is powerful.
Yeah. And when the toss up is fundamentals and technicals, and you're planning on this being a position trade, I would lean more on the fundamentals than I would the technicals.
I just think the cover call allows you some management techniques that other systems don't.
Yeah, so I like your ATVI.
The Duke does not get his head chopped off.
Duke survives
Duke survives.
Duke survives
for a week.
I got a week reprieve.
You may leave. No, hold on. I have to dismiss the Duke so that I can allow the other person.
I'm getting me a hat. I'm getting me a Duke hat.
Duke, you are dismissed. You might leave and have.
It might be a Duke Blue Devil hat, but I am getting me a Duke hat.
Who's coming in next? Is it you, Tim?
I will grant your majesty with my presence. Yes, absolutely. As a mere squire,
I did not play this. You'll grant her with your presence.
You will grant.
Hold on.
Wait.
Let me give you a quote.
Wait a second. Is that some pre-age mansplaining there?
You're lucky to have me, so I'll show up.
Dark ages.
Hold on. Let me give you a quote from the Queen of Hearts from Alice in Wonderland. This is a specific warning to Tim because he will be the one that will get his head.
I don't like his odds.
I warn you, child. If I lose my temper, you lose your head.
Well,
but since Tim,
no. I want to see him get his head chopped off. Go ahead.
My queen. I have a very simple offering to you. In fact, I did not think through this as wise as the Duke did. I will admit that up front. He brought two different bits of analysis to allow you to choose, like a roast pig and a roast duck. And so you could choose what you chose to.
I know my queen.
That's very smart. I am not as intelligent as that queen, so I only brought you one offering. Hopefully it does pass and I get to keep my head. Bring up Microsoft if you can. Okay. I'm glad we're on the weekly chart. This company is 1A in the market for me, Queen. It is the top stock I would pick in an investment portfolio. We did a contest on the podcast a couple weeks ago. It was the first stock off the board that I chose. It is my 1A. I know the fundamentals. We know the fundamentals. Matt knows the fundamentals. We all appreciate what Microsoft brings to the table. Recent technical conditions, we had a 3-week pullback, on tech weakness, but if you compare that relative to even like, say, the NASDAQ, Apple Computer, Shopify, other big high-flying names, Microsoft held up with much better relative strength, only coming off from 246 down into that 220 zone, holding support and the rising long-term moving averages. And my queen, there's a couple of different ways that you can approach this. If you love long-term and you're looking for equity, obviously Microsoft can fit there perfectly. If you're considering just a position trade in the theme and the spirit of yesterday's podcast on the long call option, you'll notice that little blue box on the very bottom right of the entire screen, only 27% implied volatility currently, one of the lower ends of the range for Microsoft, about a month in front of their earnings report, 5 weeks. So we can get volatility build, a healthy long-term chart, great fundamental company. My humble queen, it's a very simple offering. Hopefully you accept.
So the play on this would be a long call?
Long call or equity.
Time frame?
Position trade up into earnings, at least on the position trade.
Position to forever?
Exactly. If you want to do equity, you can own it forever. Absolutely.
Em, can I add one thing to? Can I be your part? Can I be like your song mate?
My Duke, that is always a risk because my head is on the chopping block, but I will put my trust in your hands. Absolutely.
If you will improve his odds on not having his head chopped off,
I don't.
You may speak.
Listen, I like it when Tim's feet get burned. I don't like it when his head gets chopped off. So I just want to make sure that we only burn his feet a little bit. That's all I'm saying. A little bit, tickle a little bit of torture. I'm okay with that. Microsoft to a portfolio, my queen, is your Excalibur. It is the sword that unites all of Britain. That's what Microsoft is. That is the power of Microsoft. It should be literally sought after by everybody in every portfolio. That is how amazing and beautiful this company is. And to see this company not even clip a short-term support level in an environment where Apple got crushed, in an environment where Amazon can't get going, and yet Microsoft just gives us a shallow retracement into a retest of 227 with confirmation above 240. Literally, the world is Microsoft's oyster, and let's just see what it does. I love it here. I think you cannot chop Tim's head off with Microsoft.
First off, I like to make Tim sort of a little bit, so he didn't have to go all of that and pitch Microsoft. All he had to do was just say Microsoft and just shut up.
You only had to say Microsoft.
And just to kind of show you my daily prep, Microsoft was second on my list of Spotify. If you guys can see my camera, I did have those first two. Spotify coming back off of a retrace. Yeah, but I don't have it in my portfolio. I thought that this would be a nice place for me to pick it up there as technology starts to come back into that play. But there was no need to talk much about Microsoft. You had me at Microsoft.
Thank you.
So
Yeah, I mean,
you
enjoy
survived.
your gift.
And you may
love it.
You may return for 4 o'clock tea and we shall discuss Microsoft
Yeah,
should you wish.
Sweet.
Very good. All right. Now,
you survived. I survived. Does the gesture survive?
There's one more member in the court.
Bring him to my chambers.
Listen, Queen, I got a couple.
Is that how you start?
Listen.
Dude.
Didn't even kiss my hand. Didn't even call me your majesty.
I got two for you. First of all, I got cash flow play for you. Let's pull a Palantir, PLTR. I had to go 2, 3, 4 levels about where I'm normally trading, but PLTR has been trading. Palantir is one of the most popular stocks on Reddit message boards, has a huge following. Company I love. I think it's a little bit pricey. But it's been trading in this long range consolidation pattern. Now, one of the things about Palantir is you can pick up some nice credits. And so in the height of the volatility, when things were crazy and there's that sell-off Friday morning, came down to about 20 bucks on the spot, which represented the bottom of the low. Let's go out to the April options. Now, when I sell puts, I like to sell them in the bottom of the range. Now, we don't have great tested time and time again support. We have a general range. I can get, what is that, about 80 bucks on the 22s. Now, what I'm interested in, now I would love Palantir to come down to 15, in which I would start loading up the truck. Love the company, love its future. It's a little pricey on a valuation standpoint, but where that doesn't that apply right now? And I'm sick of waiting for $15. Can I interest you in a $22 naked put expiring in April for 80 bucks on Palantir?
What's the delta on that 22?
$20.
And what would be my ROI?
Approximately, it's a decent ROI. I mean, but
about
okay,
37%.
88% implied volatility. You're going to be fine on any metric on ROI. Anything above, honestly, 50%, you're like.
First of all, the peanut gallery in the back is loving this. Terrence says, you lost the queen at Reddit board.
I know he lost me at Reddit board. I can tell you that. Like once he said Reddit board, I'm like I don't know if you saw, but I'm like, Queen, cut his head off right now. He mentioned Reddit in the Queen's court.
Listen, like, if you don't like money, you don't like money, you don't like money.
Chop his head off.
First of all, this is just going to be out of spite because you have been the one that has killed me the most in Among Us. So I am not even going to look at anything else. I am just going to say off with your head.
Listen, I got one more.
Oh, you're dead. Your head's off.
You're dead.
Your head's off. You're dead. You're dead. You're dead. You're dead. Your head. You can't respond.
Off with your head. First of all, it has to clear. For me, it has to clear that moving average. Just at the 50 for me.
See, now you're dead, and now Emily can dance on your grave as she gives the analysis.
Yeah,
I'm really interested in bringing GE to the Queen's Court too, you know.
Oh,
that was my next one.
No,
so,
I love the cash flow on that. It does have some very juicy premiums, but your two brothers did win me over with Microsoft and ATVI. So I have to have one that displeases me. Otherwise, I can't be a queen if everything always pleases me. So you, my friend, are chopped today.
Well,
then we survived.
I have escaped the court and I'm seeking exile in the kingdom over, and we shall launch our penny stock brigade against your kingdom.
Guerrilla warfare, huh? I don't like your chances.
You have been exiled. Do not return.
Wait a sec. We have Microsoft and you have Chico Foss.
Listen,
I like our odds.
Chico Foss up 6% today, HD up 4%.
As you flee the kingdom to try to save your head, was your
you want to do scoreboard game?
Was your other pick better? Do you think it was stronger?
What was your other pick?
GE.
Oh.
Oh, you were.
GE. No, I like how GE came down. I played the support bounce, actually. Came down old breakout level, stuck it pretty clean, moving up. I like the trend. I like the space it's in. I like it. I like GE moving forward.
Mm-hmm. It's hard to talk with your head rolling on the ground.
Yeah, thank goodness you were dead and we didn't have to hear you pitch GE to the Queen.
Your Majesty, thank you for holding court, and that was a lot of fun.
This was a lot of fun.
Fantastic.
I don't like my chances of ever surviving this game.
No, you're supposed to play the game. You brought up a high volatility, implied volatility of 88%. So the naked put.
I bring up stuff I trade.
Mark,
I get it.
You don't kill me on Among Us. Here's how you get there. You don't kill me on Among Us the first time you have a chance to.
Oh, you think
And-
you're surviving the next game of Among
So
Us?
you're telling me, Mark, you don't have any Microsoft and you would rather do Palantir?
I do
Like
not have any
Palantir
mic-
is your less volatile position? Like that's a less volatile position? Palantir?
Yes, Palantir is about as safe as I play it these days.
Dude, you need an intervention where we have you buy a utility stock.
It's not happening until something changes.
It will, I promise you at some point. You will be buying a utility stock this year.
REIT,
I guarantee it. REIT, utility, staple, some 5.7% dividend stock. Like, oh yeah, I can't wait.
Oh,
We'll see. Listen, market conditions change, things change, you adapt, right? Maybe, you never know.
that's correct. That's correct. All right, fun show here today, guys. I love the analysis. I enjoyed Queen's Court quite a bit. We'll be doing that next week as well. Let's start getting some final thoughts from the team, and we will start with the man fleeing in exile. Marky, what are your final thoughts out there?
Listen, I hope we've learned lessons in the volatility stress that we had, right? Like, because we might go on this really nice run of really profitable trading, right? And it could be great times. Market certainly seems to want to give her another leg up. But let's not forget the lessons from 2 weeks ago plus, where that was some heavy downward pressure. If you are over margined, if you are over leveraged, if you are just pushing it with leverage too much, it can get really nasty really quick. And at some point, there'll be another nasty stretch. Does it happen after Powell tomorrow, or does it happen 4 months from now? I don't know. But I do know that if you manage it responsibly, make money, but don't put yourself in an irresponsible position that if the market turns, it catches you on the wrong side.
Mm-hmm. The Queen, you're next.
Same sentiments as actually Mark. Fed speaking tomorrow, not that it's not that we're expecting any surprises from the Fed speaking tomorrow, but be cautious, slow down on your speed, as Mark said earlier. There's still some very great trade setups that are coming up, especially in the technology area and communication sector. So just trade accordingly, business as usual.
Maddie.
A couple questions that I'm looking forward to getting answered over the next few days is obviously looking at energy to see what transpires from a pattern perspective here. Do we actually start a dip here and we start looking at bull flags and bull retracements, or do we hold here and look at potential high base breakout type scenario? So, I think that's going to be answered over the next couple of days, honestly, to see if what technical pattern we're going to be looking at in energy right now. If it holds today, you're looking high base. If it comes down another day, you're looking flat. Comes down 2 more days, you're probably looking retracement. So I think the next couple of days in energy is going to be really important, just to kind of try to figure out how we're going to navigate that next really good trading environment in energy. I don't think it's today on the dip. I don't think it's tomorrow, but I do think it's coming up fairly soon. And in the next few days, as we navigate the Fed, is going to play a role in energy. And, honestly, the same conversation a little bit in finance and a little bit in basic materials. You're looking at a high base scenario here in materials, so perhaps a breakout there is tradable. Really like that. Is specifically chemicals in materials are looking pretty saucy out there right now as well. So a couple little just micro technical events that probably need a couple days to transpire before we get a real good read on that. And then obviously navigating the Fed tomorrow. And seeing if they, start dropping Operation Twist or any hint towards any, yield curve controls that they're looking at putting out there in the market, and then breaking down how the market's going to react to that. Looking forward to that tomorrow. So hang out with us there. And then, Em, you talked about tech and you talked about comms in your final thoughts. And, comms has been extremely impressive from a defensive nature, but now you're starting to see it getting paid out. That defensive nature is now starting to pay out the people that were sticking with comms here. And when you're looking at comms, obviously there's been a lot that's already kind of made. It's the trades out there. but you still got, you know, Comcast out there, CMCSA, you know, breaking out at 57.5 with confirmation. You know, you're looking at Fox. Fox was on our scouting report over the weekend. And, you know, I talked about it yesterday, Fox. I said, you know, we were looking, this was yesterday, this was the weekend, but we had a Fox because we were looking at, you know, the DISCA of the world and just saying it's slightly overextended, a little bit more of a difficult read there from a triggering perspective. But we thought Fox could, which is certainly running with DISCA and specifically Viacom here, VIAC, you know, DISCA and Viacom are the storyline that's happening in comms. But, you know, comms, News Corp and what, or Fox News Corp and whatnot are certainly jumping on that coattail a little bit. And our, you know, philosophy coming into the scatter report was Fox was going to play some catch up to DISCA and Viacom specifically. We're starting to see a little bit of that on Fox, a little bit of that on Comcast. So, you know, you got some strength happening. There's still trades to be had there in communications. And, you know, we talked about technology, and obviously, you know, Tim, you were looking at Microsoft earlier today, but we broke down the technology sector in detail earlier today in the with the technical read, as well as yesterday, as well with the K-trade analysis. Well, obviously, we do have some a little bit more of a bullish stance on technology today, with that slight little breakout there, fading as the market goes throughout the day. We'll see how it closes there from a confirmation perspective. But if you're looking at comms as a little bit of catch up, man, you got a couple plays out there. A lot in not comms, excuse me, a lot in technology is still kind of trash-like, right? And needs some time to settle down and to clean up those charts a little bit, you know, because they're just giving a little bit of a difficult read. Not the case on CDW here. Good, clean breakout potential here on CDW. FISV also has a high base with momentum. Maybe it needs a few more days with the 9 EMA catching up to it, but look at that 125 handle over the last 3 days.
Oh man, that we go back to yeah. I mean, and I like the history, right? Like even during the market volatility at its highest, man, it barely budged, right?
It didn't do much, right? And then it just hesitates here. Pretty like clean breakout on FISV. TEL here, nice clean, perhaps breakout potential as well. I was looking into semiconductors today, guys, and quite frankly, a little stock that we've made fun of many times in the last year about how they just cannot, they're the IBM of the semiconductors, and that's Intel. And quietly, Intel has just said, you know what, Justice Brothers, shut up. We're going to try to achieve all-time highs here. And then you look at this on the daily chart here, Mark. Look at that breakout of 64. Look at that coupled over here with 64. You put that on that weekly chart. Look at that 64 handle on that weekly chart. That is the pandemic range for Intel here, guys. You're breaking out of that pandemic range for Intel. Intel, obviously, all-time high analysis here. I think Intel could be a little bit of a more conservative play in semiconductors if you don't have the thirst for the volatility of the Microns, AMDs of the world. Maybe Applied doesn't fit your semiconductor analysis the same way it does for me. But Intel, you know, technology picking up a little bit earlier today. Intel picking up a little bit as well. And then the last one I had, and I wrote down the symbol, and I was so impressed, Mark, by the cleanliness of the trigger. And I'm just looking up the symbol. Okay, I got the symbol now. I just couldn't remember it. DAVA. High base, real volatile on the weekly. Look at it on the daily here, guys. Look at that trigger above $90 on that DAVA. So you mentioned tech, you mentioned comms. Yeah, there's still trades to be had out there, guys. That's what I love about this marketplace. I absolutely love this market.
Might I suggest that next week you help your brother Mark, and perhaps he might survive if you
Well,
finally help him.
I did help. I did
Like
help.
this.
Okay, I did help Tim. Tim, I vetoed Tim's first pick. We're not going to talk about that.
Listen,
Guys, you're talking to the queen. Okay,
I'm a man of the people.
You're dead because you were a man of the people.
I don't know no stinking
Play the
royalty. I'm a
role.
man of the people.
Listen, I'm gonna give you some advice as you approach the Queen's Court next week. The Queen, she likes luxury.
Thank
She
you.
likes.
Well, you know who has some of the nicest hotels
she doesn't
in
like-
America?
Mark, like you acted like you were staying at a Motel 6 here in the Queen's Court, bro. Like at least act like you came from the Hilton. So that's all I'm saying. Like, the Queen likes blue chip, bro. The Queen likes blue chip. That's all I'm saying. Her first trade, guys, was Amazon. Her first trade was an iron condor on Amazon.
Need to revisit that
First
story.
trade, 6 weeks into her career, iron condor on Amazon. That's who you're talking to. Tim, there's something somebody told me many years ago. Know your audience.
That's right. That's exactly right.
Know the Queen, bro.
Got to read the room. All right. I love that final. By the way, I love that final takeaway from all of you guys. My simple one is this: go listen to our podcast that we just released yesterday afternoon.
Oh, you thought I was going to pitch the Trade and Justice podcast. I'm sorry, bro.
Oh,
I had those charts on my mind. I wanted to get them out there.
I enjoy it.
I love that dollar chart.
I thought it was a good wrap up. Actually, I loved it. So, but just really simple podcast. We talked about the long call strategy. It's a very popular, common tactic used by option traders out there in the market. Mark, Matt, myself, we had a conversation around implied volatilities, some things that you look for, delta, choices, the difference between theta and delta strategies in general, where you can use ranges of delta on more theta stuff, where, long call options, you need to be a little bit more strict with your rule on that. So if you are a long call trader, if you're a trader at all, make sure you give that podcast a listen. I did drop the link in the chat, and there's wonderful content on the website that you can go and take a look at as well.
Oh, definitely. While you're out there checking out the podcast, and you can get the podcast at any app, iTunes, however you want to listen to your podcast. Had a real good time on pod. Tim, thought you and Mark had an excellent conversation on long calls during the feature. But while you're over there, guys, obviously check out that newsletter. Mark, myself, Christian, Tyler, we've all written newsletters of the past, and you can go just get us a amazing content for a very long time. So
Absolutely.
obviously, Tim, this might give you a little bit of look at this, bro.
I love it.
Look at
I had
that.
a little nostalgia from that right there.
Hold on. How far we go back?
Oh, wow.
Oh, protective options in 153. Yeah, we were probably wrong on that analysis.
Oh my goodness.
That was
16 episodes. It's been quite a journey with that
it's fun.
podcast.
We have fun with the pod.
Heck of a lot of fun.
And pro members, don't forget the coaches show tonight. Greg Holmes and Gino Poor on the coaches show tonight.
Nice.
Wonderful.
Love those two together.
Guys, have a wonderful day. We'll be back tomorrow, same time, same station. If you've not done it yet, subscribe, click the bell, make sure you're alerted whenever we go live.